how do you get extremely rich in crypto in 2025? I want to talk about this today and give you some of the tools that I've been using to make a lot of money. Now, if you are starting and you're just getting into the market, there's significant risk at this point, to be clear. We're at a point in the market where a lot of people have been in for years and they're looking to take profit soon. On the other hand, we still have just gone up about 50% from the previous market cycle high, which is still relatively small compared to what we've seen in the past. Last cycle we saw 3.5x. So far we've seen like a 50% gain. And a lot of people think if there's a strategic Bitcoin reserve, we could be seeing $250,000, $500,000 Bitcoin this cycle. We have certain charts that are saying that we could see an average of 532,000. That's the stock to flow method from Plan B, or stock to flow model that says that we could see an average of 532,000 for this cycle. So a lot of people are thinking there might be a lot of juice left in the tank. How do I get rich? How do I take advantage of this market cycle, which is what we're going to be talking about here today. If you don't mind, hit subscribe, turn on the bell notification underneath the video, and let's get into it. So Bitcoin is up significantly from the bottom. If you were able to dollar cost average into Bitcoin, at the peak you would have been up about 612%. You'd still be up about 540% from this recent pullback, with Bitcoin sitting around 98,000 right now. To be clear though, unless you had a lot of money, you wouldn't have gotten rich from this, or unless you had gone like balls deep, excuse the language there, but if you have $10,000, you're not going to get extremely rich from buying Bitcoin in one cycle. That's just how it works, right? I mean, maybe we continue to see Bitcoin go up and you time it perfectly, and you could make like significant life-changing money, but I wouldn't say, again, rich, depending on how much you put into it. Let's say Bitcoin goes up to $200,000 and you bought it $16,000. Again, $10,000 in it would have made you about $120,000. So yes, significant amounts of money, but that's not, that's not retiring money. Like that's not money that you're going to retire on right away. Maybe you can invest it in the S&P 500 or in Bitcoin or keep it in there for a long time. But again, if you're looking at just like a short period of time, people are looking at other ways of getting rich, right? Again, unless you're sitting through multiple cycles or something like that. And I'm not trying to discourage anyone from just buying Bitcoin because it's fantastic. A 6x return is insane. That would take like 2 decades, more maybe even, in the S&P 500. It's an insane return, and I am heavier Bitcoin than any other asset because I'm trying for growth, but I'm not trying to get like insanely rich and take on that amount of risk, right? I put a lot into the market, so I'm okay with a 5x return, a 10x return. I'm really happy with that. But if you're sitting there, again, thinking, I have $10,000, I want to see what I can turn this into this bull run. Couple things to think about. One, automatically, you're going to have to take more risk. If you're not happy with a Bitcoin-like return, you're going to have to take some more risk in some way or another. Now, how do you do that? And should you even take the risk? Well, I oftentimes think it's smart just to make the best risk to reward ratio decision, no matter what it is. So if you think that you want some arbitrary number, maybe you want 100x, that can be risky because you probably will end up with less money. If you're going out and trying to get 100x, most of those times that you're trying to get it, you'll actually lose money because you're trying to invest in things that are just really risky. A lot of cryptos will go down to zero. You might send crypto to the wrong wallet. You might get hacked. You might invest in a rug pull. Like there's so many different ways that this can go. But again, maybe you have part of your portfolio in Bitcoin. Maybe the rest you're like, hey, 5-10% of it, I'm going to go balls to the wall, try to get a 30x, a 20x, whatever it is. I'm going to try to do my best because this is the time before nations get in. This is the time where we can still get a 3-5x return, and maybe you just didn't have the money back here. Okay, so there are a couple different options you have. First of all, you could go to CoinMarketCap and try to find the next Solana, right? There's a lot of cryptos here, a lot of cryptos that are trying to market to you specifically, that want your attention, that are spending money on influencers, that are spending a ton of money to try to get their name in front of you, that are manipulating the price so they get in the top 100 so that people pay attention to them. I think that's difficult. I think it is very difficult to figure out what the next Solana is, obviously, because otherwise everyone would be millionaires. It's also hard to determine like what cryptos will be around. There are 2 or 3 top 10 cryptos last cycle that are either nowhere to be found or way down on the list this cycle. There are new cryptos that are popping up like meme coins, but those are risky too because maybe there are 5 top 100 meme coins that are new this cycle and 5 million that went to 0. So that can be difficult. One way that I'm approaching this is leverage trading. So I think you can take one of 2 approaches. You can invest in lower cap cryptos. Again, if you're trying to approach the market and take some risk on, either invest in lower cap altcoins or you do something like leverage trading. Now, how does this work? Well, you sign up for an exchange, you deposit crypto onto it. Maybe it's USDT, maybe it's Solana, something like that. It's easier to just deposit USDT, maybe from Coinbase or Kraken or Bybit or whatever your on-ramp is. Transfer over some USDT, some USDC. This is probably the most explosive way to make money and to lose money. This is like you're digging a hole and you realize you can just use dynamite and blow it up much faster, but you can also blow off your hand. So you have to know what you're doing. But this is something that I've been able to use to get insane returns. I've had 10x trades, 15x trades with a couple $100s in, I've made thousands of dollars. I have a couple trades that are lower risk, and we'll talk about why that is, that are up 300, 400%, but I have tens of thousands of dollars in them. I use multiple platforms. One that I really like right now is CoinW. For a variety of reasons, which we'll talk about. But let's talk first about what leverage is. We'll explain it really simply, and then we'll get into a couple different strategies that you can use that I think can be really beneficial. So, what is leverage? It's basically getting the ability to trade with more collateral than what you have, or more value than what you have. So, let's say you take a 2x trade, right? You have $100 worth of USDT. 100 USDT, but you get access to trade 200 USDT. Now, why would they give you the right to do this or the ability to do this? Well, they take a small fee when you open the trade, and then they're funding fees as time goes on, small fees like 0.01%, and this changes a little bit depending on the market, but then they charge you a fee when you close it as well. So you get access to more capital. Depending on how high a leverage you go on, they charge you more fees. So you can, for example, get access to $1,000 with $100 of collateral. So you can buy $1,000 worth of Bitcoin, even if you only have $100. Now, what are the downsides to this? Well, obviously there's that tiny fee, but then also you can lose your money a lot quicker. So let's say you buy $1,000 worth of Bitcoin. Bitcoin falls down 10%. You're on 10x leverage. You get liquidated. You lose that $100. If you're on 2x leverage, Bitcoin would have to fall 50% basically for you to get liquidated. Now, the upside of this is if you go and you have $1,000 worth of Bitcoin, you're using $100 as collateral, and Bitcoin goes up 10%, you get 100% return. It's the leverage times whatever percent return or loss is what you make. Now, depending on how you set it up, I like limit orders. You can, or isolated, I like isolated leverage instead of cross leverage, cross margin. This allows you to only lose what you're putting into the trade. So let's say you have $1,000 in the account, but you open up a trade with $100, you use isolated, you can only lose that $100. So it's a way to take calculated bets. Now, again, how do you even approach this? Why would you do this? There are certain times that it makes a lot of sense to open up positions. And to be clear, you can long the market, you can short the market. So if you think the market's going to go down, you can actually short the market and bet against the market. That's one reason that people like leverage. I don't like to fight the market though. It generally goes up, so I try not to short. But you can use leverage at calculated times to get really good returns. So let's look at a couple of the trades that I've made recently. Bitcoin is one of them. Let's see where that is. Bitcoin, I opened at an average price of 93,000. So we'll go to the Bitcoin chart. we have BTC, USDT here. So Bitcoin had this uptrend, you can look at a variety of ways, but we eventually got rejected. So we had support. We hit this line several times, and then we dove below it, went up, tried to break above it again, got rejected, came back down. Support and resistance. Support is just something that we bounce against and move up. Resistance is something that we go up against and get sent back down. So we had this trend line. We continued to hit it. Jerome Powell came out and said, yeah, we're not going to cut rates as quickly as people expect. So that kind of sent the market into a tizzy. People got really worried, thinking that the Fed was going to rug pull them, that they're seeing something in the economy that looks bad, or inflation that looks bad. It's more likely. So the market got scared. It went from $108,000 Bitcoin all the way to $92,000. Keep in mind, this is at the end of the year too, so some people are taking profits. Some people are trying to reposition their portfolio for the new year. I thought that this fall was an overcorrection. Jerome Powell still says that the economy looks really good, that inflation's coming down, but not coming down quite as quickly as he thinks it should. We have the possibility of strategic Bitcoin reserve. We still have a lot of institutional buying. We have a lot of corporations buying. I still think it's early enough in the cycle that this is just a dip. So we saw a nice 16% return, or 16% drop. And I said, okay, I'm looking at this. I think this isn't the worst time to go long on Bitcoin. We have a good drop. So we've already fallen a decent amount. Some people are wanting to buy, thinking that this is a good time to be buying below 100,000. We have a massive catalyst coming. I'm going to open up a position for about $1,000, and I'm going to go 6x leverage. Now, I could have gone a little bit more aggressive. My thinking was if we fall down below 93,000, so I got it like towards the bottom in here. If we fall down, we could go all the way to the previous resistance. That's probably a point that people will push it down to, so 74,000. We could go all the way down there, but we're going to have some support around 92,000 because we've hit that several times. We're going to have some support around 90,000. We're going to have some support at pretty much every level that we've hit before. So 88,000, 86,000, 85,000. So we're going to have a lot of support at all those points. People are going to want to buy because they think it's going to go up with the strategic Bitcoin reserve. So my liquidation point of 78,000, I thought was a pretty nice level to be at, because if we go down to 78,000, I'll open up another position here and just continue to open up positions if I get liquidated. On the other side, if we start to rally, I'm going to get a really good return. So I went 6x leverage. So far, we're up about $5,000. We'll call it 5%. But because I've used 6x leverage, I'm up 32%. So I got an outsized return. Now, this is not an insane amount of leverage. This is what's considered lower leverage. Some people say stick below 5x leverage. I like to dabble above that level. It depends on the asset. I like trading Bitcoin more than altcoins, just because I think it's a lot easier to read. I think it's got a lot more liquidity. So it's going to be harder for some whale just to dump it to liquidate me. Now, I do dabble with some of these altcoins though. Let's look at a different one. Let's look at XRP. XRP is in a different scenario. We had a massive move. I longed the position while we were moving up, made a massive return. And then we have this kind of asymmetrical triangle where we get lower highs, we get higher lows. Eventually, it will break one way or the other. So this position, we're at $2.14. We had bounced off of the support again. I went long thinking we would continue moving up into this, up to the upper side of this range, which is played out so far. I'm up 72%. I was just a 5x leverage. My liquidation price is 172. So that puts us below all these previous support levels. And it puts us right above this previous resistance. If we fall down here, I'll probably long the position again, because I would think that we would see support at this previous resistance of 163, but we're not even close to it now. What we are close to is a breakout. oftentimes we will see a breakout above this, and then we might even see a retest where we go up, come back down, bounce off of this trend line, and then continue up. And unless we start moving considerably down, I'm going to keep this position open. Right? If we move down, we could see it come right back down to the bottom side of this, which is around $2 and maybe 5 cents, $2.02, something like that. And then maybe another bounce, or we break below this trend line. You can put stop losses on this as well. Another thing you might do is you might wait for us to break out above this line and then long the position, put a stop loss. So if we start falling down back below and go back in the range, then you close the position at a slight loss. I'm keeping the position open. I do think, depending on what Bitcoin does, and with a strategic Bitcoin reserve coming up, with Gary Gensler leaving, and possible better regulation that's maybe a little bit better for Ripple, I do think we could break out again, and then I'd be looking for 271 or 290 to break above those levels, which would put us at higher highs. So this is a really good time to be watching XRP, and if it does break out and then retest and then bounce again, it would be extremely bullish, and that's something that we've seen on Solana. So I opened up a Solana position as well. We can see it right down here. Solana is doing something really interesting. I opened this position at 184, and I did that because we had seen this downtrend pretty much throughout the whole year. When Bitcoin saw a similar downtrend, we got rejected. It had gone up to 210, then got rejected at 192, then got rejected at 184, but then we broke out above it. This was right after the election. We broke all the way up to 264. Then we started to fall down. So we took a nice drop. Like, this is a significant pullback. We're talking 33%. So we had already seen a lot of downside, and we started to bounce off this trend line. I thought this looks extremely bullish. Again, flipping previous resistance into support. I'm going to long at 184. And we've gone just nothing but up since then. We're up at 217. So I have a 10x position because I thought this is a pretty doggone good, pretty darn good position to be in, for us to be bouncing off this line. I could close it if we fall back below, but yeah, we just continue to move up. So this 18% gain has turned into a 180% gain. So just bringing it back, what kind of situations do I look for, and why is now a good time to be long this market? And to be clear, I do have a link to CoinW underneath the video. We have a massive catalyst coming up. A lot of people are excited. A lot of people don't want to be on the sidelines. We just had a bunch of rebalancing for the end of the year, people taking profits, or just hedge funds that were now 30% Bitcoin and they only want to be 15% Bitcoin or whatever it is. So we had a pullback. However, we have nothing but bullish catalysts for crypto. We have strategic Bitcoin reserve legislation possibly coming in a couple of weeks. We have states that want to do the same thing. We have extra liquidity coming from all across the world. We have, I'd say, a pretty good economy in the US right now. So it means that they can continue to lower rates, but they don't have to do it so aggressively that it causes inflation. There's just a lot of political support for Bitcoin right now. There are a lot of corporations are adding it. Banks are starting to be able to custody it. We have the change in accounting rules as well. There's word about big tech companies evaluating whether they should buy Bitcoin. So we have all these bullish things happening. I think this is going to drive the market higher. I also think we've seen a decent sized pullback to the point where it takes some risk off the table. Depending on the situation, I'd much rather buy when we've seen a pretty nice drop, 10, 15, 20%, and we're at a key support level and we start to bounce off, as opposed to long at all-time highs, because then we often do see pullbacks of 10, 20, 30%. So we're seeing this big pullback. We're starting to see a bounce as well. I like investing during big pullbacks, but once we've seen a bottom, I like when we're at the bottom of a triangle, kind of like that XRP chart, right? When we're at the bottom and we're bouncing off the support line, or when we're flipping resistance into support, or when we're breaking out of a triangle, like what is about to happen on XRP, I believe. We're at pretty key support levels on a lot of cryptos. And the cool thing about using leverage as opposed to investing in a meme coin, first of all, there's a lot less work. you're already watching Solana and Bitcoin and Ethereum and these cryptos because you like or you're invested in them. So it's not a ton of extra work as opposed to researching a new small cap crypto. And there are just a lot less unknowns as well. You don't have to worry about the team, right? Like as much. I mean, you have to research the platform that you're trading on and feel comfortable with that, but you don't have to research 10 different meme coins and try to figure out what gives them an edge. There's better liquidity, right? You don't have to worry about actually selling if the thing blows up and you have like 5% of this meme coin. You don't have to worry about selling. There's way better liquidity. Yeah, you also don't have to worry about fees, putting some small Ethereum based crypto on your wallet, then having a $50, $100 fee during the bull run. Yeah, I think there are a variety of reasons to like this versus a meme coin. But of course, you have to make your own decisions. It is risky at the end of the day. There are various ways that you can approach it too. I would never put like the majority of your portfolio in a trade. I would never put the majority of your crypto on a centralized exchange unless it's a small amount and it's not worth it to get it off. But I do think it makes sense at certain times to leverage trade. Of course, if you're okay with the risk. Also, like I said earlier, I do like CoinW. This is one of the platforms I'm using. There are a variety of reasons for that. Right now, we're setting up a new campaign. The last campaign give you up to 55 Solana just for trading on the platform. Now, this isn't free money, right? Like they make fees and then they are giving it back to you. Every exchange charges fees out there. So they're giving it back to you in the form of like a trading event, Solana. Something else that they do there that I think is really cool, they have a special group that you can get in as one of my affiliates. So if you sign up under my link, there's a second link underneath the video. So there's the CoinW link, and then there's another link that allows you to get into a Telegram trading group. Telegram is one of the biggest communication platforms out there. And basically, you just verify your UID, which tells them that you signed up under me. You can find that just like by clicking up here. It will show it'll show you your UID, and then you can get in on this trading group. Now, what is this trading group? Well, they have professional traders that scalp trade, which means like they trade on a very short time frame, and swing trade. So this might be a couple days to maybe a week or so, maybe a little bit longer. And they give their opinions. They are literally just in here posting what they're doing, what they're seeing every single day. So if it's a lot for you to trade and you kind of want to be like handheld through it, or you want videos on a more often basis, more regular basis, you can join this group and you can get market analysis like multiple times a day. You can see what they're doing. There's a support group there. You can talk about it with other people in the group. You get, like I said, you get videos too. So I don't know a lot of other platforms that do this, but I think this is an awesome tool. And we've had some people join it, but I think there will be a lot more people that want to join it by the end of the cycle. So you can get yourself in there now. You can also get to be part of that trading group and get access to some of those free giveaways. Like they update you on the platform and what they're offering new users and stuff like that. So if you want to trade crypto, check out CoinW underneath the video. Again, make sure you know what you're doing. If you don't even know what Bitcoin is or what some of these cryptos are, you probably shouldn't trade them because there are risks to this and you should know the risks. But I like to do this. I think it also keeps things interesting. It helps me work on my TA with actual money on the line too. I think it's a good learning experience. And it can help you kind of time if you do want to take profit at the end of the cycle by working on some of these indicators, by looking at TA and that kind of thing. Let me know your thoughts though underneath the video. Of course, do your own research. Thank you so much. I really do appreciate it. Check out CoinW and I'll see you in the next one. Bye.